Hey trader, have you thought about doing one of these trading evaluations to get funded by a prop firm? I just did myself and I just failed. And I'm going to walk through why I failed. And hopefully you can all learn from my mistakes and implement what I'm going to implement. And you get to follow along from here because I'm going to document my whole experience as to eventually getting funded. If this is your first time here, welcome. I'm Luis. I'm the founder of the Independent Quant, where I help traders turn their trading ideas into algorithmic strategies. Now, this one, where you've got a couple slides here, the big takeaway that we're going to do is I'm going to give the three things that I did wrong, the three things that I did right, and then from there I'll go and do a deep dive as to how I was managing the whole experience and how that entire experience went to the point where I failed. And then I'm going to get into what I'm going to do next and how I intend to pass this trading evaluation. So with that, we're going to continue here. So first off, disclosure, I'm not going to be providing any trading information or recommendations or advice. I am not a licensed professional. This is all for educational purposes. Any trades that you take are your own. Anything that I discuss here is for your educational development. So like I mentioned, we're going to do a quick overview, what went wrong, what went right, and the final thoughts and next steps. So let's jump into the overview. So the Independent Quant, if you've been following along with the podcast and what I'm doing and who I am, I've been trading for about 10 years now. I've been live since 2019, trading my own money. And the Independent Quant is my journey to building an algorithmic trade desk. So how does prop trading fit into all this? Well, as it is, most of the trades that I do are on my retirement account because that's where my money is. But the goal has always been to trade to augment my income and hopefully even completely replace the income. While that's with a growing family a little challenging to save and keep money completely designated purely for trading. So our firm would pretty much give me the opportunity to have funds that I would otherwise not have to be able to trade. So part of this journey of the Independent Quant does involve getting funded so that I could trade those funds and do so using algorithmic strategies, which is something that wasn't even a possibility, at least for the prop firms that I knew 6 years ago. So that's how this all fits into the whole Independent Quant journey. Then for here, we're going to talk now what we're going to cover again, what I did wrong, what I did right. And if you'll notice is it's all rooted in systems. Now, I'm going to be a little hard on myself because I am a career project manager and a solution architect. So my role and what I consult companies in is in developing systems, improving systems, both cloud-based. I'm all in IT. I take my systems design and architecture very seriously because that's what I do for a living. And you'll see that that is what I did wrong, and it's also what I did right. Kind of a little ambiguous there, but you'll see why. Let's find out. So what did I do wrong? So the three big things that I did wrong were one, lack of systems. That's not exactly accurate. I did have systems, but again, I'm very hard on myself as to what constitutes a system. For me, it's a very much a binary thing. You have a system when it's effective and produces the results that it's supposed to produce. Since that didn't happen, I say that I have a lack of systems. But really what you'll see as I kind of go through this is I didn't understand what the requirements were. I needed to go explore. And ultimately, it sucked that I had to fail to figure this out. But in that journey, I understood now what the requirements for the system are. It just took me a bit of time to do that. But the big foundational number one reason why I failed the trading evaluation was because of lack of systems. Now that went through me going through multiple brokers to try to find the right broker, working through different copy traders, and then trying to develop my own. And all of that really kind of set the foundation for just failing the eval. Now I should mention that when I design a system, I kind of go all in on it. I try to make all my systems adaptable, but there are critical nodes that I'm dependent on. And for one, in this one was using TradingView. For the strategy that I'm using, it's very chart dependent. So I have to chart everything, measure on the chart. So having a tool that is easy to use, that I can do all that work on is critical. And that's where TradingView falls into this. I've been off and on a TradingView user as far as paid user. I've always used it for free at least. So this is not funded in any way or sponsored by TradingView. Um, Now I have used multiple brokers in the back end with TradingView as my front end. I like that it's web-based. It's keeping with my goal of the independent quant that it is geographically independent. I don't need to lug my computer, which I use a desktop. For the time when I travel and I use my laptop to trade, I can continue to do so without adverse effects to my trading. So that's why TradingView was the critical thing, but there's a lot of limitations with TradingView for what I was trying to do, and we'll get into those as we go through. But lack of systems, all those different components there, and the variance in all those components that haven't come together just wreaked havoc to my entire trading strategy. Along with that, I mentioned that the copy trader was something that was a challenge. I looked at paying for a copy trader. I mean, I was trading my own account and using a copy trader to copy those trades to the trading firm that I was trading with, which was Lux Trading Firm. What I found though was and this is not on Lux, this is on Match Trader, which is the software that they use. They had a horrible documentation on their API. I think my timing was just wrong on that. When I first pulled up the documentation to write the API so that I could connect to both my account and to Match Trader servers, it just kept failing. I spent a month and a half, almost 2 months, just trying to get that to work, only to find that at the end of those 2 months, they eventually did update their documentation for their API. And once they did that, I was able to make the connections and start everything to work. By that point, though, I was 5 months into my trading journey. So, or at least my prop trading journey, and a lot of the damage was done. And the last one, and this one I'm really gonna have to walk through all through, is the eligible contract participant. This was a minor roadblock over the whole course of the whole trading evaluation, but it was critical because of the time when it happened and how much investment I had made into, not financial investments, but emotional and time investments I had made by that point to be a funded trader. When you put these three things together, one thing that I've always known of myself as a trader is that when I'm mad, I am not a good trader. I take horrible trades. I could not trade angry. And dealing through all this stuff just pissed me off like you wouldn't believe. So I had to really kind of keep my wits about me. And that's a lot, probably what lengthened the time for me to finally come up with a solution. Was I was having to deal with the emotional aspect of trading. Well, it wasn't the trading. It was the systems, right? It's like, especially since these were skills that I am good at, that I pretty much get hired on contract to do. I didn't take kindly to not being able to solve some of the problems that I was facing. And that's, again, me just being hard on myself. But in any case, whenever I put a lot of effort into any one of these three components that I just mentioned, or the first two, really, the lack of systems and the documentation for the copy trader, well, I would start trading the next day and would just not be in a good headspace. And that really adversely affected my trade performance, as you'll see here when I kind of go through how that degraded over time. And when I finally got into a little groove, it improved a little bit because I got the first two under control. But then, it just fell apart again when the systems weren't adaptable. So that's what went wrong. What went right? So let's talk about what I did. Now, like I mentioned, I'm a professional systems architect. I specialize in AWS. I'm a project manager, so I lead companies in developing architectures. So that was my big strength throughout here, was that throughout the entire process, I understood that I didn't have a trading problem. I had a systems problem. So it was a matter of understanding how to develop the systems that I needed to solve the problem at hand. And as you'll see, as I go through my many iterations over the last several months to arrive at what eventually would be a functional system that I can now take forward to trade with, is that desire to always keep focusing on the system and continuously improving the system was my biggest strength, because with each little failure, it opened up another great opportunity for me to implement a new system, find a new way of doing things, a way that was more robust that I could rely on going forward. Next thing I did well was that I started incorporating Gen AI for my work. I do a lot of work with Claude and ChatGPT. Initially, though, when I designed my cloud architectures, I do those by hand. I used Lucidchart, to go on and I diagram everything that I need to do, all the different components. And then I code a lot by hand. But having ChatGPT and really, really helped with finally getting the functional code faster than what I'm doing now. I trade. So I'm a contractor. I contract with different companies during the day, but I day trade and I swing trade. And so I don't trade full time, but I definitely do carve out a portion of my day specifically for trading. That said, is that I don't have all the time in the world to then build the systems for trading. So that's where leveraging tools like ChatGPT and Claude really helped, where now I could expedite writing the code, developing, the different files that I needed for the architecture that I was trying to build. And then all I had to do was kind of put my Jam Manager hat on and verify that the code that these two systems were producing actually solved the problem that I needed. If I'll show a couple of my files here, you see some of them are hundreds of lines long. If I was to code all that, it would take me a considerable amount of time, right? Because I still have to keep trading and I still have to keep my contracting business going. Having those two tools and leveraging those two tools was critical and being successful in building the last system. And lastly, this is something that I've done since day one as a trader, which is I've kept a trading journal. And that helped me see where the different problems were. Like I said, I don't work well angry, but I was able to document everything as I evolved through all the different systems iterations and see what the strengths were and see what the failures were and come back to when I wasn't angry and I could think more clearly and actually address the different problems that were being presented to me. So those were what I did right. So let's walk through the whole process and what the last several months looked like, where the failures were, how I was adjusting to them, how I kept my wits about me to understand where the problems were and how to diagnose them. So with that, let's look at what this looked like. Okay, so here we are, and one of my key methods to just track performance overall, I'll get into my journal and how I journal each one of these days. But ultimately, I like to see visually how I'm performing trade wise. And I've been doing this forever. What I've done different here is before July of 2025, I actually kept a calendar and I'm pointing to my wall because that's where I usually kept it. And I would, with a marker, mark my performance for that day. And what you see here is a value of R, which is the amount of risk of the account that I'm risking per trade, and then how I ended that day. Days in green are obviously profitable days. Days in red are days where I lost. And then days with a zero point 0.0 means that I traded or I performed a trading function. I just didn't actually take any trades. So I am not a high frequency trader. A big trading day for me is me maybe taking 3 trades in one day. So there are days when I sit down and there are no trades. So that's what you see at the zero point 0.0. And then the dashed on the days, those are days where I did not trade at all. I did not come to the computer or do anything trade related. So every day at the end of every trading day, I capture how much my performance was and I put it on here. This serves several different purposes, which is seeing how I'm performing over time. Maybe the market has something to do with it, but as far as my performance being good or bad or otherwise. But the big thing is I want to be able to see on this calendar and get a gist of how my trading is going. The other purpose it serves to this is since I'm a swing trader, still very much so, I usually set up my trades on a Sunday for the week, wait for them to get filled, wait for them to get closed out, track their performance. I don't really need to worry about being active there. But since this getting funded thing requires me, it's a day trade, I want to make sure that I was making a conscious effort to it because between trading my own money, trading my retirement account, and serving my contracting clients, I could very easily just not do this prop firm thing. So the last thing that this really helps is show me how many times in that month did I actually trade. And this is only accounting for my prop firm journey, right? This is not counting for my trading with my personal account or anything like that. Those are the different reasons why this calendar exists. I've digitized it from having it being a physical thing because one, it's easier for me to share on my website. It's easier for me to do these presentations with y'all to kind of walk you through what trading looks like for me. So that's why it lives now digitally. Now, big takeaway here is that July was the first month where I said, you know what, it's about the time when I began the Independent Quant, and I was like, I need to digitize a lot of my work. Again, this is why this came from. So I don't have a way to me easily share what my training looked like before July with you, but for at least for July, we can see, all right, this is what my trade performance was like. You can see I marked there on July 13th was the week that I intentionally pursued being funded. I had not signed up for anything. See, overall, July is a positive month where I was profitable for that month using, again, the day trading strategy that I was using. So this was after a long couple of months of being profitable. So July 13th, I said, you know what? I'm ready to take this on. I'm ready to go live with this. Throughout this whole time, I was using TradingView and a sim account for Forex. I am only day trading the Euro USD pair for Forex. That's my exclusive focus, and I'm only using one strategy to do that. You want to be successful, you got to really focus in on uh, one thing at a time and then add things incrementally. So that's what I've done with this since it is such a far departure from what I normally do. And I try to capture as much in this calendar as I possibly can, which is, yes, win loss, but I also add, hey, what of value is to, what could I glean from here? And you see on the 17th to the 18th, how I've got this starred saying, hey, I missed trades on those days. Had I taken those trades, that would have been my performance for that day. So that's where July was. July ended up pretty strong. I started making my journey valid mid-month. I believe I signed up for a Lux trading firm at the end of July, and we'll look at August now. So came into August, came very, very strong. You see that first week, I pretty much, we can say ours is about 1%. That's what I was risking at the time. So I would have grown the account by 4.74% that first week. And then actually, you see it there at the bottom. Started trading day R, well, $1,000. That's for a $200,000 eval account. So that's 1%. So you see there that I actually began the Lux trading account setup on August the 5th. And then I started following along with Match Trader on August the 6th. So I had both platforms kind of going at the same time. One big thing that happened in August was that I had to go on site to visit one of my clients. Most everything I do is remote, especially because I contract with all these companies. But I actually had to go on site for the last 2 to 3 weeks of August. So that's why there's a lot of dashed lines there. Like I mentioned, that means that I didn't trade those days. And I did try to trade on the road, but that was hit or miss because at the time I was actually traveling with my family. My client happened to be in Milwaukee. My wife's from Chicago, so I hauled the family up there. Had the kids visit with their grandparents and their aunt and everything. It was a business trip, but I did have to do some family functions while I was on it. So I didn't get to trade as much as I could, but I still was working on my systems throughout all that. But that's kind of how August played out. Even though only, I had a 4.67% increase in the account. It wasn't none of that was for the actual trading eval. I wouldn't start the eval until September. So let's look at what that looks like. You see that September 2nd, and make a note there that it was my first day back after 2 weeks of not trading. So I usually give myself some grace when I have time away from not trading. It's easier for me to kind of be hard on myself for the swing trading because there's no reason for me ever to miss a Sunday to place some orders or anything like that. I I'm kind to myself for the swing trading, but for this one, because it is still very much a habit that I'm trying to develop to be a day trader, I make note that, hey, it's like my performance may suck. And it did for the first week, right? I gave back 2.65 percent back to the uh, to the trading. Then come in, hey, I set up TradingView for paper trading, and I'm ready to start the eval. So officially, it was that September 5th when I started. Now, what happened throughout July and August was I started with Owanda. I had an Owanda account. I didn't like Owanda. Wanda's spreads are just too large. I had to account that. So the way I trade this strategy is I'm looking for a 2.5 to 1 risk to reward. And that extra pip and a half of spread, sometimes as big as 2 pips, when I only have a 2 to 5 pip stop. I mean, it could be anywhere from half to uh, a, a fifth of my stop was only the spread. So I was like, this is horrible. I switched over to IBKR, Interactive Brokers, had an account with them, funded it for Forex trading. That was going to be my primary account to trade into my match trader. And in September is when things really started going off the rails systems wise. Yeah, on September 5th, I set everything up to that it can start working. Then on September 8th, when I started trying to get those trades copied, the copier did not work. I made note there. It's like, hey, these trades are not copying. I don't know why. So see, my performance for that week was still bad. It was no 1.5%. That's horrible. But the big thing is I had improvement from the previous week, meaning I lost less. And that's one big thing for us as traders is losing less progress, right? So point to me was, hey, the first week of trading, second week of trading, I'm back in the groove of things. But now this whole trade copier thing is getting in my head. I keep trading through it, can't seem to get the trades to copy. I'm working through that through the week of September 15th. And then on the week of September 22nd, specifically on September 23rd, I got on the horn with Interactive Brokers. I was like, hey, I funded the account with $2,000, which was their minimum in order to get leverage. And I was like, that's all I need. The only reason I have the Interactive Brokers was to have a live account that I could copy trade over to my match trader. And lo and behold, because of ECP, I could not trade Forex with leverage in the United States. And I'll get into ECP much later in this video, but that pissed me off to no end because now I had 2 to 3 months of working with Interactive Brokers and getting all my systems up for Interactive Brokers, only to find that they would not work. This is how bad it was, which was I said I was using TradingView. I found that Interactive Brokers, one of its software packages, I didn't look up what they were because I'm so mad at them. I don't want to even think of Interactive Brokers because they do have a TradingView interface. However, I couldn't get that to copy over to using scripts to copy over to MatchTrader. So what I found was, hey, I can write a script that listens to the Interactive Brokers server, sees when one of my orders gets filled, and then immediately copies that order over to MatchTrader. And that was the goal. I could do that using Interactive Brokers Gateway. IB Gateway is what they call it. It's a software package. You run it. It kind of connects to their servers. Then you can run a script on top of that. Well, it was 2 months of using all the different software tools that Interactive Brokers had, and then finally uncovering that this IB Gateway may be the best solution for me because it's microseconds. Can in microseconds copy a trade from Interactive Brokers over to MatchTrader. Only to find that now those 2 to 3 months of me battling this whole thing was for naught because I could not use Interactive Brokers. So backing up a bit, why not TradingView? So TradingView can't copy trades very easily from TradingView. It's made to connect to multiple brokers in that it loses some fidelity as far as how well you can use it for this sort of function. You can use webhooks. I did pay for a copy trader to send orders over to MatchTrader that way. I didn't like that because even though I can copy trade in microseconds, the actual placing of the trade for me, that's very dynamic. I am taking measurements. I'm checking to see if it's a good trade or not, seeing where I am context wise, price action trading, and then entering a trade accordingly. I can't update an order on the fly, especially with copy orders. Something that goes with webhook on TradingView, you're creating a JSON package that is pretty much static. You're saying what the lot size is going to be, what the stop size is going to be, and that's what it sends. So there's no intelligence to it. That is improper risk management. And if you guys have been watching around, I say of us as traders is we are risk managers first. And that webhook copying was just not sound risk management for me, especially for the copied account. Because either I'll be taking positions that are way too small or I'm taking positions that are way too big. So Webhooks was not an option. That's why I opted for listening to the server at Interactive Brokers and then copying it from the server to the Match Trader API. So that's how I ended up at using Interactive Brokers instead of TradingView. So that kind of blew up my September. You see, I was down a great deal for the month of September. Most of that is that first week. And if I was doing this for real, I mean, trading my own account, knowing that I would have come back from 2 weeks of not trading, I wouldn't have traded live that first week. Now, all of this is sim trading, so I never lost any money. So no harm, no foul. What is losing though is I'm losing money on the trading eval account. So, and we move over to October. You can see again that overall in October, I lost less. So again, my big losses in September were because of 1 week. Coming into October, I went back to Awanda and I said, okay, well, I could probably do the same thing that I was doing with Interactive Brokers, but with Awanda, meaning that I could set up a script that listens to the Awanda server. When an order gets filled there, copy that order over to the match trader eval. So that's what I started working on here. Got everything set up by October 8th, put my first live trade with Awanda, and it did not copy. Like I said, these sort of things piss me off to no end. So trading performance started getting affected by that. I really focused in on this whole trade copying thing and really just dug deep to try to figure out how can I get this to work. Awanda was also pissing me off because when I looked at the price action on Awanda compared to the price action on Match Trader, they were decidedly different. When I would constitute a trade in Awanda was not exactly the same as when it was a Match Trader. So that's all one on the bridge. Maybe the Match Trader one has a much better connection to the market than Wanda does. But that's what I spent the week of October 10th, 13th just battling to just kind of get all those things in order. And you see, my actual official first week of the eval was October 20th. Now, that's almost 2 months after I'd signed up for Lux Trading eval. So, not a bad loss week for that. Also, going into the last week of October, not bad losses. But I'm at this point having the problem of trying to figure out, can I get this copy trader to work? Can I do maybe trade in parallel, place an order on my personal account, and then place an order on the Match Trader account? I even explored just doing everything on the Match Trader portal. The charting was horrible, even though they do use a trading view interface. It is a light version of it. So the tools that I use to measure and determine whether or not I have a trade in my hands weren't available for me on the Match Trader one. That's how I ended up October. Just a lot of rage. That was the month where it all the system was showing me that there were some serious flaws. I didn't quite understand the requirements that for what I had designed, and it was letting me know that. Going into November, I started the week with some big losses. At this point, I went back to my swing trading strategy, where I was like, well, Lux trading actually does allow me to use. I don't have to day trade. I can trade using the swing trading. The copy trader at this point, I had just had enough. So I was like, what if I can use my swing strategies on Match Trader? So I kind of went back to basics. I had never tried these on Forex. So on November 11th, I said, okay, I'm going to move away from the rounded top, rounded bottom strategy that I was using and going into my swing strategies. Big losses in November, but a lot of that was I was still getting pissed off by the systems things. Cause I was like, if I go to swings trading, I can set it up in my personal account and then just copy, because then they're limit orders, they're not market orders. I can just put the bracket order into Match Trader and hopefully that'll work out. Now going into December, not a huge loss month. Looks like I lost about 3%. I didn't finish this one out, but this was also using the swing trading strategy. Didn't really go my way. I just had a lot of stuff working. I was still trying to work the copy trader. I was still trying to work all the different systems, even though I said I was all in on the OTA. That's Online Trading Academy. That was my educator. Also not a sponsor of this video, but I wasn't getting the performance that I wanted. I also had I was trading very distracted in December. That's at the end of the year for my clients. So usually there's a lot of hustle and bustle on that. So I was more trying to stay in the game in December with my trading to not have it fall off. My swing trading, again, easy for me. I've been doing that for almost 10 years. So I finding the time to do that, not a problem. But this was one where I was very distracted, a lot going on in life. It's one of the busiest times of year for me because that's, when you're closing out the year. And that was all in my head, plus dealing with all these systems issues. But that's how I ended off the year. I didn't actually violate the account until January. So let's see what January looked like. Okay, so taking a look at January, I shifted back to my rounded top, rounded bottom. I was able to finally get a copy trader that worked. That's I finished coding that with Claude. Didn't trade that first week of January. Usually the price action was pretty rough, and that was the beginning of my contracting year. So there I was looking for new contracts, stayed away from trading as far as actually placing orders, but I did work on just my systems there. And that's where I finally got my trading, my copy trader to work. So unfortunately, by the time Monday, January 12th of 2026 came around, I blew up my Lux account. I went under by like $200. I started decreasing the amount of risk I took per trade, just kind of save the account. But the damage was already done. I had already spent several months in multiple trades. Mind you, every time I had a trade that I was trying to copy by hand, meaning I entered it on my personal account and ran over, did it on the Lux trader, everything would just be just jacked up. So a lot went wrong by that point, and that's when I lost my account in January. I'm recording this in March, so this is well after the fact. Keep watching the Independent Quant, and we'll see how this goes from there. But now I want to show what this actually looked like in day to day, as far as like how I was tracking my performance. Okay, so here we are in my Obsidian. Obsidian is a note-taking software. It's what I use to not just take notes, but it's my journal, not just my trading journal, but that's what I'm showing you here. It is my journal overall. I'll make a video to discuss how journaling has been critical for my success. But for purposes of this video, I journal absolutely everything that I've done. So each one of those days that you saw on the calendar had a respective trade date where I can go in and look at what my trading was like that day. I put in what the flow is of my pre-trade routine, my post-trade routine, the chart for how it played out, and then post-trade analysis of what I did well, what didn't go well. And I do that for every single trading day. Then after that, every trading week, I do a weekly trade analysis. Let's see if I can find one real fast. So you see these weekly trade analysis that I do. And here I bring in I summarize what happened that week, what I could have done better, what I could do better, what the problems that I faced were. And then after I get all these weeks, I also do a monthly trade analysis where I bring in what happened there and all the different notes, and I do an analysis on that month's trade. And that's how I was able to do this video is I can come in here and see what happened each one of those months, and I can see my trading evolve over time. And this is going to play a very critical role or how I am eventually going to solve the algorithmic portion of all this. Not to get too far ahead of myself, but that's what the Independent Quant is about, is building a quant trade desk. And all these files are going to play a critical role in my ability to do that. So that's what each one of the months looks like. It's critical that for all of you to use a trade journal of some kind. It doesn't have to be anything fancy. These are all simply just text files. The software lets me copy paste screenshots into each file, and I've got a record. Like I said, if I can point to the video that I'll eventually do on journaling, you'll see that I've been doing this for 10 years. This is a journal. I also keep a trade log. And let me show you that now. Okay, so here's my trade log. Every trade that I take, I come in here and I log the trade number, the date that I took it, whether it was long or short, what the quality of the setup was. If it was an A setup, a B setup, a C setup, or if I missed the trade, I capture that all right here, what the profitability was. Really, the profitability isn't as big a factor for my analysis, but rather this R multiple is how well, because this tells me how well I manage my risk and how much of a profit of a multiple of my risk am I getting. Lastly, I'm capturing the efficiency. Now that's every winning trade. Sometimes I have to close trades early, or I close trades early because I see something happening that I don't like. Efficiency tells me how well I'm executing that strategy. So 100% efficiency is what I'm looking for, but anything above 90% and I'm happy. Log every single trade and I take notes on that trade. Now, those notes are also in the trade journal. So I've got this three-way way of tracking my performance. I've got the calendar, trade journal, and trade log. So each serves its own different purpose. I can analyze my trading from different ways. And as you can see, it may look like a lot. I'm very systematic, so this is all kind of easy breezy for me. But what I'm using, this is Google Sheets. The journal is in Obsidian, which is a free software, all our other text files. And the calendar, I just got a template off of someplace on the internet, and I just put the data in. So all free stuff. I hang that on the calendar on my Dropbox. I could probably put it into my Google Drive, but the Google Sheets, that's all I use. Used to be PowerPoint and Excel what I used, but it's been over 10 years since that, so there's no need to be using Microsoft Office as much anymore. So I've used these tools. So that's part of what I did right, was continuously analyzing what I was doing, what was working, what was not working. So with that, let's take a look at how all this played out when I look at the dashboard for my Lux trading. Okay, so here we are on my Lux trading dashboard. You can see that I blew up this account. It was pretty much a steady drive the whole way down. You can see here on the account balance with a couple of blips up to the upside. A lot of these, again, I cannot trade angry. When I trade angry, it is the worst thing in the world. But you can see that I blew up my account, and this, as a pat on the back for myself, is I blew it by $20. So I was managing my risk fairly well the whole way down. It was just dealing with all the systems stuff that I was dealing with. But there wasn't much recovery. We could analyze what caused this little bump here, but I actually violated the rules far earlier than this. And if I go into the analysis tab here, this risk per trade for me is what's most important. If you can see that it's a little out of control. I've risked as little as less than $300 in a trade, and I risked as much as $1,500 in a trade. That's a difference of 1.5% all the way down to 1/4%. You see it here, it goes forward in time. So my risk position sizing was all over the place. And a lot of that is exclusively, well, not a lot of it, it's all because of bad systems. The position sizing on my own personal account was far more consistent than this. But when I was trying to copy that over, be that with a crappy trader or doing it by hand, it just went sideways. This here is actually unacceptable for them. Is I placed this order without a stop. That was something where I was managing both platforms, and I thought I was going to get kicked out of the eval at that point. Somehow it let me keep going, but that right there speaks volumes of how horrible my system's controls were. Right, there came a point here where you see that it all kind of started coming down. This is what I prefer right here. This from this point that I've got highlighted on is far much better in control than what's happening between these 2 points, especially right here. There shouldn't be this explosion on up. If anything, it should have been bouncing between 600 and 1200, because that's roughly 0.5% to just over 1% of assets under management of the $200,000. But this is just improper position sizing. And like I said, it all was rooted in just bad systems, right? Oh, actually, this blue line, if I don't know how well it comes off on the screen, but it shows the risk percentage per trade. And it's just these spikes is just unallowable, right? So that is what I wanted to show on the dashboard that's of greatest value. I think some of these analysis points, this is why I keep a trade log, because this doesn't really tell me anything, right? There's one chart here that's of value for me, like lots per trade. I don't care. Who cares about the lots per trade? I'm a risk manager. So this is what matters. Concurrent risk would matter if I took more than one trade at a time, but I don't. I only take one trade at a time or open one position at a time. So there's just a lot of information here. Now, mind you, what I do for a living is I architect systems on the cloud for analytics, right? So I am a numbers nerd, as any which way you slice it. But what I find is a lot of these analytic dashboards give more information than is actionable. So it's just too much. That's why I keep my own trade log so that I can look at what's actually working, what's not working, what I need to correct. For example, like this risk per trade, I don't really need to come in here. I just wanted to show you all what the dashboard looked like and what I was tracking along the way. But I could do this in the Google Sheet just with drawing a chart, and which I have done. So that's kind of wraps up some of the good and the bad of what I did. Let's talk on the API and lastly, ECP. Let's do the ECP first. So this is a note I took on this whole ECP, eligible contract participant, and why it just completely derailed my trading back in August, September of 2025. The eligible contract participant, now I'm not a lawyer, but this is just what I found online and was able to kind of understand. It comes from the U.S. Commodity Exchange Act. Pretty much it says that an entity or an individual needs to have assets greater than or equal to 10 million, or if you're hedging, assets greater than or equal to 5 million. I'm doing good in life. I'm not yet a millionaire, let alone a multimillionaire. Hopefully I'll be there sooner rather than later, but I don't qualify for an ECP. The interactive brokers cannot provide me leverage because I don't meet any of these ECP contracts. And that was that. It really, really pissed me off to no end because I had invested so much time to be successful with interactive brokers as the broker of choice for my account. Because my ultimate goal with all this is to, yes, get funded, yes, trade algorithmically, but then take the profits from the prop firm using the same strategy and fund my personal account and have now that algo trade both. So I'm going to be far more conservative trading the prop firm account. I'll probably risk no more than 0.5% per trade. But my personal account, I've got no problem risking 1% there. That's what I do with my swing trading. That helps me grow that account more aggressively, but still responsibly, right? So that is the vision for at least this one strategy, part of my funded journey, right? Well, I thought Interactive Brokers, because it is a broker that supports institutional traders, it can support really large lots, and it had 1/5 the expenses of Owanda. Seemed like the perfect broker. But because of that, because of ECP, I could not use Interactive Brokers. So Owanda stands apart for that, because it holds a retail license. That's as much as I can understand as far as why Owanda can do what it can do and Interactive Brokers can't. So I had to switch over to Owanda. At the time of recording this video, which I'm actually recording this in March of 2026, I am now trading with Forex.com because I can pay a commission with Forex.com per trade and be able to bypass the spread, cost of the spread. The spread is an issue for me, and I'll have videos where you can follow me along as I trade this strategy by hand, and you'll see why uh, having a large stop is a concern for my strategy because now I have to move my target further on out. Well, how much further on out? It's 5 times, right? 5 times is the difference between Interactive Brokers and Oanda. By going with commission based with Forex.com, I pretty much get the Interactive Brokers style costs, not exactly, but as close as I can get and still comply with ECP and all these other rules that I've got to comply with. So that's where I am at today. That's kind of part of the next steps, but I'll get into more of that when we actually get to the next steps. So that's ECP. Now let's talk about the documentation for Match Trader. So here we are at the Match Trader documentation for their API. This thing seems to be constantly under development somehow, which makes sense, right? I can't knock them on that. That's again part of what I do as a contractor for my clients. But this site looked completely different in August of 2025. I couldn't tell you exactly the content and how it changed from August 2025 till December 2025, which is when I finally got the trade copier to work. But that shift of what was in the documentation, that I didn't take notes that detailed as to what I was doing when I was connecting all these APIs, was one of the biggest problems for me because I could authenticate into MatchTrader, but I couldn't get the actual order to MatchTrader and have it verify that it accepted my order. So I was successfully connecting to both sides, meaning my personal account and MatchTrader, but it was for naught because it went nowhere. But now it's far more robust. And the beauty of this is I took all this, I copy pasted what was necessary into a prompt for Claude. Claude was by far the best one for me to use to write this script to build this out. But that was how I eventually got my copy trader to work. Big deal with APIs. Okay, so what are the next steps with everything I just said? What went right? What went wrong? How can I improve my trading? So systems, if I can draw them, I can build them. So that is what we're looking at right now. This is Lucid Chart. Every system that I design usually starts here. This is not a complete system. This is purely my idea of the different components of the system. Typically, I would draw out the lines between them and show what the relationships with all the different components are. I'm going to make a dedicated video on just this system design and what I am doing as far as building an agentic or automated AI trader. But here you see is that I am going to build all this out in AWS. The strategy that I'm using is systematic, but it has an immense amount of discretion in it. And how to code that discretion is very difficult or impossible, really, using traditional methods. But what I thought was like, well, if I use an agentic AI system that pretty much gauges and learns using a knowledge base, a RAG, maybe I can take this strategy and implement it so that it's successful. I know it works because it worked for me, right? So with that, we talked about this part here on the left, which is just copy trading. So where I'm going to disregard this. The copy trader that I built and wrote runs on an EC2 instance in the cloud. And it's listening to my server, my personal account server. So that's would be the Oanda Interactive Brokers or Forex.com server, and then copying that over to the match your API. Part of this conversation is going to focus more on this end, really on this guy here, Amazon Open Search. So Amazon Open Search is a service provided by AWS that I can include a RAG, which is a way to provide knowledge base to Amazon Bedrock, which is the AWS's LLM or AI tool. What I'm going to do is because I have all this extensive documentation that is my trade journals, I'm going to include those as the knowledge base for Bedrock to use to assess whether to take trades or not. So pretty much replacing my thinking logic by AI. Is that going to work? Well, you have to stay tuned to figure out if this is going to be something viable and doable for me. But that is the big blue arrow as to what my next step is for this. Okay, final thoughts and next steps. I just talked on the agentic algo. I showed you the diagram for that. But that again is number one here is focus on building an agentic trader, build the knowledge base. So I'm going to continue to trade by hand so I can keep building that knowledge base because I can make my notes better now that I'm thinking, hey, this is not just going to be for myself. I'm going to remember, not everything, but most of the things that I write on from several years ago. I can look at notes from several years ago and kind of fill in the gaps. AI is not going to be able to do that. So what I've been doing lately is my journal, I've been writing them so that someone else could read it and make sense, someone else being AI. So they're a little more detailed, a lot more detailed. And take all those journals and place them into Open Search. So I'll keep trading by hand. I'll more than likely rejoin the trading eval, keep trading by hand. I know I've got a good copy trader now. My systems are at least set up and dialed in that regard. I'll have the agentic trader trading a sim account for Forex.com using their API. I'll see what the performance is there. And then if that works well, hopefully I'll be funded by the time that I've fully tested the agentic trader and I can start having it trade that funded account, or I could see what the next steps are from there. So those are the next steps and what's coming along. If you found a lot of value there, I thank you so much for listening to me as I kind of shared what this is and where we're going with it. But I'm here for you, right? I'm here to help you become an algorithmic trader as well. Now, my focus with a lot of y'all is you're probably someone that is not intimidated by computers. You shouldn't be intimidated by computers if you're looking to do this sort of thing. But if you're looking to build an algorithmic trade desk, either for that to be your full time business or to understand how to do it for a side hustle or manage your accounts, then you're in the right place. This is the Independent Quant. That's what I'm building for us, helping you follow me along as I build this for myself. And I look forward to seeing you as part of the community. So head on over to .com. There should be a link available wherever you're watching this video. Sign up for our newsletter. You can get, at least initially, what's happening with me and all the different efforts that I'm doing. This is going to be a lot of the focus of effort right here, but you'll get that. And eventually, I'm going to have code alongs and trade alongs. In order to participate in those, you're going to have to be part of the newsletter because that's the only place where I'm going to share when I'm going to be doing those. But I look forward to having you as part of the community. And thank you again for tuning in. This is Luis. Keep it green.